Joining me now is Bernstein Research's Aneesha Sherman. Aneesha, it's great to have you. What sort of general backdrop do we have right now for the consumer going into the final quarter of the year? There was a real scare surrounding some July consumer spending numbers. We maybe have kind of calmed a little bit from there, but how does it seem?
Yeah, since July, we've had some good news. We've had a strong back-to-school surge. So most retailers and brands have had good back-to-school numbers, which is a really nice leading indicator for holiday, because if you end up with a bad back-to-school, you come into the holiday with excess inventory and it becomes very promotional. So we did not have that. And now the holiday season is a few days shorter this year, so it is going to be promotional and retailers are eager to get started on it. And so it's going to kick off, in October, starting next week. But retailers seem optimistic. The data look better. Consumers are starting to look a bit more positive. It helps that last year's comparables are quite soft. So I think we will start to see stabilization and growth in retail over the next few months.
And with that, though, you still see the off-price segment as being the place to be in terms of investing at this point, even though those stocks, many of them have done so well already?
Well, they've come off their highs a little bit this week because they aren't exposed to China, so they haven't been beneficiaries of that China trade. But in general, in terms of absolute performance, they have continued to outperform the market sequentially for the last 5-6 quarters. They continue to comp positive. They continue to secure trade down volume. And I think they will continue to do well through the holiday season because people are still value seeking. People are still looking for a good deal. And they're incrementally more positive, but they don't have money in the pocket yet. They have aspirations of money in the pocket with the rate cut, but it hasn't quite translated into actual earnings power yet.
Right. So what we hear from a lot of these chains about just a more discerning, careful consumer value seeking, as you say. So Ross Stores, one of those names that remains your top pick at this point?
I think short-term Ross is my top pick because it hasn't actually re-rated this year. It's actually derated despite strong performance year to date. And that's because people have concerns about the low-income consumer. But now as we see consumer sentiment changing, any benefit to the lower-income consumer is going to disproportionately help a value retailer like Ross. And we haven't seen the kind of multiple expansion that we've seen at TJX, so it's relatively undervalued. So I do like it for the next couple quarters. I think performance is going to be strong, particularly if the lower-income consumer starts becoming more positive into the holidays.
And I know that, you don't directly cover Costco, but was there anything in those numbers or the company's commentary to make you kind of think differently about how consumers are approaching this period?
It was not surprising. I mean, look, the comp was still strongly positive. They didn't see an effect of the membership price increase. Both good signs that the consumer is still resilient. Now, they're doing a lot of reinvesting in price, just like Walmart is doing, just like Target is doing. But a lot of that is going into staples. So it's going into the must-have, the food budget, et cetera. And that just makes a little bit more room to spend on discretionary. So from a discretionary perspective, I would read it as a positive.
All right, and do want to look ahead to Nike's results coming next week. Obviously, a lot of excitement surrounding the CEO transition, but what should we expect to hear from the company about, I guess, the current performance and outlook?
So the CEO won't be on by next week, and I don't expect him to be part of the earnings call. He joins in about 2 weeks, and so it's not going to be a very eventful print. The one thing I do expect is I think they will cut guidance again for the back half. They've now had 3 quarters of either cut or disappointing guidance. I think there's going to be a 4th one because I think it is the right setup for the new CEO. We have an outgoing CEO in his last quarter of earnings, and I think they're going to try to de-risk the rest of the year to set up the new leader in the best way possible to then come in on a strong note and put out some strong numbers. So I think we'll get a guidance cut. I don't think it will be a negative catalyst, though, because it is widely expected, and it could actually even just be a positive catalyst as just a clearing event to clear the decks and set the stage for the new leader.